Credit cards look harmless. Just a small piece of plastic, a quick tap, a simple swipe. But behind that tiny piece of plastic is one of the most powerful money machines ever created. Every single year, credit card companies make hundreds of billions of dollars. And here is the surprising part. Most of that money doesn't come from rich people, it comes from normal people. People who believe they are simply paying for things. People who think they are using a financial tool. But the reality is very different. Because in many cases, people are not using the credit card. The credit card system is using them. To understand how this works, we need to go back to a very simple idea. The psychology of spending. Imagine you walk into a store. You find something you like, you walk to the counter, and you pay with cash. When you hand over physical money, your brain actually feels something. A small sense of loss. You watch the money leave your hand. Your brain registers that moment. This is known as the pain of paying. Cash makes spending feel real. Now compare that to using a credit card. You tap the card. The payment goes through instantly. No counting money, no watching bills disappear. Just a quick digital confirmation. Approved. And suddenly the transaction is complete. The moment passes almost instantly. Your brain barely processes the loss. This small difference completely changes how people spend money. Multiple studies have shown that when people use credit cards instead of cash, they tend to spend significantly more. Sometimes 10% more, sometimes 20% more. And over time, that difference becomes massive. But increased spending is only the first layer of the system. The real engine of the credit card business is something else. Interest. Let's imagine a simple example. You buy something that costs $1,000. You pay for it using your credit card. At the end of the month, your credit card statement arrives. On that statement, you see the full balance, $1,000. But right below that number, you see something else, a much smaller number. Minimum payment due? Maybe it says $25 or $30. That number feels manageable. It feels safe. Paying $30 instead of $1,000 sounds like a great deal. And that is exactly why it exists. Because the moment you choose to pay only the minimum payment, the remaining balance begins collecting interest. And credit card interest rates are extremely high. In many cases, they are above 20%, sometimes even higher. That means the longer the balance stays on the card, the more expensive it becomes. Interest slowly begins to grow, month after month, quietly, without most people noticing how large it becomes. That $1,000 purchase can slowly grow into $1,200, then $1,400, then even more. Not because you bought more things, but because time passed and the balance stayed on the card. This is the snowball effect of credit card debt, and it affects millions of people. Most people who fall into this situation never intended to. They simply had an unexpected expense, maybe a car repair, maybe a medical bill, maybe a moment where money was tight. The credit card offered a simple solution: pay now, deal with it later. And for a short time, that solution feels helpful. But when the balance stays there month after month, the system begins working exactly as it was designed. From the perspective of the bank, the ideal customer is not someone who pays nothing, and it is not someone who pays everything immediately. The ideal customer is someone in the middle, someone who uses the card frequently but keeps a balance on the account. That balance generates interest every single month. And when millions of people do this at the same time, the total becomes enormous. In the United States alone, credit card debt has exceeded $1 trillion. That is more than $1 trillion sitting on credit cards. Balance is slowly generating interest every day, every month, every year. But interest is not the only way credit card companies make money. There is another revenue stream hidden inside the system: transaction fees. Every time you swipe or tap your card, something happens behind the scenes. the store you're buying from must pay a fee to process the payment. This fee is usually around 2 or 3%. That may sound small, but think about how many times people use their cards every day. Millions of stores, billions of transactions, groceries, gas, online shopping, subscriptions, restaurants, flights. Every swipe generates a small fee, a few cents, maybe $1. But multiplied billions of times, those tiny fees turn into massive profits. Companies like Visa and MasterCard built global networks that process these payments. They do not lend the money themselves, they simply move the transaction through their systems. And every time money moves, they earn a small fee